Yes, on the stock of the morning, though, Bajaj Auto, well, they delivered margins yet again above 20% for the fourth straight quarter. But to understand what went on in the past quarter, well, we have Mr. Rakesh Sharma, the Executive Director of Bajaj Auto, who joins us. Hi, Mr. Sharma. Thanks a lot for joining in. Well, the street has given its verdict with regard to the numbers. But how would you analyze and what's your take on the past quarter's numbers?
Quarter two has been an absolutely stellar performance. Top line, for the first time, we have in a quarter exceeded 13,000 crores. EBITDA of 2,653 crores is also an all-time high. And we've delivered a PAT before the exceptionals of 2,216 crores, which is also an all-time high. So several records. Domestic revenue at its highest and LATAM breaking its own record this quarter. Several smaller milestones as well. And one of the most important features of this quarter's performance is that this is the fourth successive quarter of delivering 20% plus EBITDA margin. And what is noteworthy is that this is despite the fact that the electric two-wheeler portfolio has increased substantially. In fact, the electric portfolio of Bajaj Auto is now over 20% of the domestic revenues. And if I may add the green portfolio, the greener fuels portfolio is almost 44% of Bajaj Auto's domestic revenues. I would say those are the highlights of this quarter's stellar performance.
Mr. Sharma, morning, sir. Good to have you on. We take your point completely that, yes, it's no mean feat, 4 straight quarters of 20% plus margin. But that I think for investors, when it comes to a company like Bajaj, it's always, ye dil mange more. And that seems to be reflecting on the stock price today as well, the cuts that we're seeing. So what is the outlook? Can you improve margins from this level of 20-odd%? Because the estimates are almost 100 basis points, on the higher side. Some people are expecting 21%. So is that even possible? Or will you remain around the current level, considering the ramp up on the CNG side and as well as the EV front?
First of all, this is an absolutely best in class in the industry margin percentage. And you just have to compare our peer set on this. Number two, like I just said, the 20% plus margin has to be viewed in the context of the substantially growing electric two-wheeler portfolio, which we are very, very happy about, but which is margin percentage dilutive because it is obviously much, much below the average margin. And the ability of the company to continuously expand the electric portfolio and still deliver a net margin of 20%, I think displays very robust and dynamic operations control and management.
Got that. Now, sir, if you can specifically give margins for the EV portfolio at Bajaj and put that into context.
Well, we don't dive into segment-specific margins, but I can tell you they're obviously not at an average level. They're margin dilutive for the company in the case of two-wheelers. But having said that, I can also say to you that the electric portfolio, which combines both two-wheelers and three-wheelers, for Bajaj Auto is now more than break even, it's margin positive.
Well, talking about exports, so while you mentioned that export revenue has seen double-digit growth in the past quarter, but you also highlight that Nigeria still remains a concern. By when do you see sales turning the corner out there?
Well, Nigeria situation is recovering very smartly, but it is fragile because its macroeconomic conditions are such. The currency, as you know, has devalued by almost over 50% in the last 9 to 12 months. And that is the thing which is causing a lot of fragility. But having said that, I must tell you that in April, we retailed 5,000 motorcycles in Nigeria, and we used to retail 50,000 in a normal year. By Q1, these retails had increased to 15,000, and in September, we've retailed 25,000. So, of course, they're still below what was Nigeria's peak. But if you look at the last 6 to 9 months, there has been a steady rise. We think this rise should continue, but because the underlying macroeconomic conditions are uncertain, we are only cautiously optimistic about Nigeria.
Okay, now let's get to something which the market really wants to understand, Mr. Sharma. Festive demand, right? How has demand been, if you can quantify it with numbers, how has demand growth been so far in the festive season? What we understand from dealers is that it started on a strong note, especially for two-wheelers, but how strong is the question? Go on, sir.
Well, if you look at the last few months, the demand for two-wheelers had finally got out of the negative zone into a positive zone, leading us to believe that, the festive should be, let's say, 6 to 8%. But just in the pre-festive, we had started to see some weakness. And I would say that the first half of the festive has been slightly below expectations. There is growth, but very marginal growth in the industry. The 100cc bottom half segment is, as per Vahan registrations, negative, and the 125cc plus segment is positive. But put together, the industry is at 1 to 2% growth in the first 15, 16 days of the festive. But having said that, the pattern nowadays, we've been seeing in the last couple of years is that even the last couple of weeks can sometimes be surprising. And therefore, we have to wait for the festive to get over. And festive really gets over by first week of November after Chhath Puja and all that. And it is only then that we will know. But just from a number point of view, in the first half of the festive, I would say it's slightly below expectation.
Okay, got that, sir. And I think that also explains the kind of reaction we're seeing on the stock today. It is a bit of a knee jerk, but that number, like you pointed out, just 1 to 2% in the first 15 days, that is something the market's not liked. And therefore, we're getting a very sharp reaction. Given the run-up in the stock price, the market adjusts on a lot of things, of course, beyond just business dynamics. Thank you, sir, very much for joining in. It's been really good listening into you. That's a very helpful perspective. Thanks for joining in, and we look forward to future conversations as well.